All right, team. So today for the AIT Mastermind group, I want you to start really helping people in our group understand the numbers. So we've got this spreadsheet. I downloaded this off of Helios. I'm going to send it to Chris. But basically, I want what would be great is if the group really understood the numbers, and where they don't, they get the opportunity to figure out what the cost for that is for the, so this is, I don't know if you guys have seen this, but there's a short-term and long-term analysis. So short-term is obviously fix and flip, and then long-term is rental. Okay. But um we talk about how to run comps and stuff like that. Chris, you can talk about that as well. I use Redfin and I've done a training on that. But coming up with your after repair value, and then going and working backwards as we've always done. So, hey, how much is the title work going to cost? Because people should have built a team by now and understand how much the title work is. If they watched the closing, title escrow and closing, this is important. Then there's recording fees, the appraisal in the area that you're investing in. Have you talked to an appraiser? How much does an appraisal cost? Now, if you're working with a hard money lender, there's sometimes just prepaid interest, lender fees, attorney fees, pest report if you get that done. So all of these are the numbers that we want to go through and help the team realize what they are when they're buying property, right? Or if is it in a flood area, your inspection report, taxes. If you guys know this, if you buy in the middle of the year, taxes are prorated. So what are you paying? And then what are you going to pay your attorney or your title company to do everything? So what are the closing fees involved, right? And then there's your total buying cost. And then obviously there's your selling cost. So whatever the, you're going to plug these numbers in. Advertising, internet expense, signs, recording fees, attorney fees. And if you're uncertain about something, or if they are unclear, then have people ask questions, because that's how we learn, right? We're trying to make a safe space for everyone to learn. So then you calculate your total selling cost, as we used to do, writing things out. And then if you're working with a hard money lender, or even if you bought a property with a line of credit, there are payments, right? There's your line of credit payments or your mortgage payments. There's property taxes. There's your insurance. When we flip houses, there's cleaning that we do. Sometimes you flip a house in an HOA area. So you want to really nail down on every single thing that you're going to be paying for when you're holding the property. That's the time between when you buy it and you're fixing it up. There are holding costs, right? While you're in the deal. This is going to help you tally your total carrying cost. And then of course there's your rehab amount. So if it's 50 grand, if it's 30 grand, whatever your rehab is, and you're going to enter, how much do you want to make on this deal? Or what's the minimum profit that you're willing to do this deal for the time that it's going to take? Okay. And then the spreadsheet's going to give you your offer. Okay. Really understanding the numbers here, my friends. And then there's your long-term analysis, which is more of the same thing, except like in Mark Kohler's classes and buy and hold classes, where they talk about really understanding your ROI when it comes to understanding the depreciation, the appreciation, the cash flow, all of that stuff. So you got your property address, the rent, the price that you're buying it for. And now you guys know, if you look up the property on Redfin or Zillow, a lot of times it'll tell you the land cost and the property value. You cannot depreciate the land. So you're going to put in all of the information that makes sense for your deal. Okay. Obviously for residential, you're going to depreciate it over 27 and a half years. For commercial, it's 39. And so it's going to start calculating everything. You can enter your interest, whether it's your interest, whether it's fixed financing, whatever it is. And then principal pay down, right? And as you pay the principal down, you build equity, right? So then this will increase the appreciation based off of your value. And then, every market appreciates different. Some cash flow markets don't appreciate the way equity markets do. And you can actually look up the rate of appreciation on sites like Redfin or Zillow. There's so many reporting. And then this is where, you have just because you have $1,000 of rent doesn't mean that you get to keep $1,000 of rent in every month. Doesn't mean you get to keep all that money. What is that, like $12,000 gross, right? Gross is what you make before taxes. Net is what's left after taxes. Now, we always recommend having a little bit, like 10% for vacancy or loss of rent, or someone doesn't pay, right? So then after you have your gross income and you subtract your vacancy and lost rent, that gives you your EGI, your effective gross income. You take your EGI, and we're really breaking it down to the nitty gritty with the spreadsheet, and you subtract all of the cost, right? The two big ones, as we always talk about, are the annual taxes and insurance. But maybe you're paying electricity, maybe you're paying water and sewer, maybe your tenant's paying all that, right? So you come up with your total expenses. So your income, gross income minus expenses, equals your NOI, or your net operating income. It's the same way with apartment buildings, with mobile home parks, right? And you take your net operating income and you subtract your debt service. Now, if you're working with a 30-year on a 30-year loan, right, fixed, that might be better. If you're working with a hard money lender, your debt service is going to be a little bit more. But whatever's left over is your cash flow, guys. And it's really understanding the numbers and why you're investing in a certain thing. Now, obviously, you're going to take your initial down payment. Like, let's say you went to a traditional bank and they wanted 20% down. So that's your initial down payment. And then there's your carrying cost and your pre-occupancy cost, like the things you did before you got it rented out. Maybe you bought it and put some initial repairs in it, but you come up with your total investment. Okay. Now, depending on how much money is coming in after everything's done, you got to look at how long is it going to take for me to get my initial investment back, right? In more expensive markets, to make 20% of $500,000, it could take 5-6 years before you really start seeing cash flow, right? But you're still going to get all those other benefits. In a cash flow market, you can have your money back within 2 to 3 years. I'm making it back in 1 year just because of how I'm doing it. But and then this is going to give you your percentage yield for the investment, right? And what that really is your cap rate. Okay. And then obviously, you can type in if you have any cash reserves for additional capital improvement. So guys, today, I know this has kind of been a longer video than you wanted, but people might bring deals to the table, right? They're saying, hey, this is what I'm doing. We're pitching this. Maybe you give everyone 5 minutes to talk about what they're doing, right? But I want you guys to engage in really learning and understanding, so we can grow the group, do more deals, and provide value. Guys, thanks for listening. Hope we have a really good turnout tonight, and let's make it a good day. Bye.